What's up, YouTube? My name is Ty, financial advisor and founder of Hyperion Wealth Management. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is MULN, Mullen Automotive. This finishes at 95.24 cents today. That is down 11.81%.
And it's gone.
So we've been covering this stock for a while now, almost 3 months since it first squeezed, and then the Hindenburg report came out, and it's been slowly bleeding since then. But today, this did make top 10 on StockTwits, had over 4,000 mentions, so once again, we're going to analyze it. So we did have some news today, let's check that out. Battery Innovation Sensor has completed the cell preconditioning in preparation for cell performance cycling. This is a C20 preconditioning format to establish cell capacity baseline. BIC will enter into high-rate cycling as part of the performance-based cycling with those results forthcoming. So just a small update on their battery testing. So minor news there. Other than that, there's really no reason to justify this price action today, especially because tech went up so much. So I'm just going to assume that apes are selling and shorts coming in here. So let's go ahead and analyze here. So first of all, this appears to be a cup and handle in the making. Bottom of the cup being the low of 52 cents. And there can be multiple possible tops. It can be 380, 585, 715, 770, 845, 905, 980, 1085, 1165, or even the high of 1590. And actually here, we have a smaller cup and handle. It looked like the bottom was 115, but support did break for that in the past few days. Don't really know where the bottom is just yet, but potential tops can be 270, 340, or 425. Although I do think the most realistic top would be 270. But those are all bullish indicators that is telling us that the stock should come back up to one of those tops to complete the cup. And here we do have a descending wedge. So that's a bullish indicator. That is telling us the stock may break out to the upside pretty soon. It looks like it's consolidating between 125 and 85 cents and should be done consolidating very soon. And we do have a triple gap down. First gap down is back at 1190, so that's a bullish indicator. That is telling us that the stock should come back up to 1190 eventually to fill this gap. May take a while, but eventually it should. Second gap down is at 465, so that's another bullish indicator. That is telling us that the stock should come back up to 465 to fill this gap. And then today we had another gap down at 117. Small gap, but that is telling us the stock should come back up to 117 eventually to fill this gap. So triple gap down, very bullish. And we do have a gap up back at 60 cents. So that's a bearish indicator. That is telling us that the stock should come back down to 60 cents to fill this gap. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is trading between the sideways channel, the rectangle of 98 cents and 88 cents. So if this goes to the upside, next levels of resistance would be 98 cents, 115, 125, 135, 155, 170, 180, 190, 195, 205, 210, 225, and then 235. There is resistance above 235, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 88 cents, 75 cents, 60 cents, and then the low of 52 cents. So right now at this current price, 95 cents, the channels to the upside and the downside are pretty decently sized, so expect a regular amount of price action either way this goes. RSI is currently at 28, so that is oversold and undervalued, so this could be a good buying opportunity. Not financial advice. And this did 58 million in volume today, way above the average of 25 million, so the sell-off today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So what I'm about to say is just based on the technicals, not the fundamentals. Because fundamentally, I really don't like the stock. I don't think it's a good company. There were some very serious accusations on the Hindenburg report that the CEO has yet to respond to. That's a red flag. And financially, it looks like they're having a lot of trouble. So this company fundamentally looks really bad. Technically, it does look pretty good. Long term, looks like a good buy and hold. Got some strong bullish indicators in the cup and handle and the triple gap down. Short term looks pretty bullish too, although there is the gap at 60 cents, which is pretty scary, so I do believe there is still more downside to go. So therefore, if you want to go long, not financial advice, honestly, 95 cents is already a really good entry. A lot of bullish indicators here. Short term, cup and handle, descending wedge, low RSI. So you really can't go too wrong buying in here at 95 cents. So I can support going long at 95 cents and lower. And if it pulls back below 95 cents, then you can just average down at the supports that I mentioned before. I do think this will come back down to 60 cents to fill the gap. So personally, I would set the buy orders to 60 cents. And I think that'd be a really excellent entry. That's near the all-time low, 52. So I would say going long here would be a high risk, high reward play. I say high risk because, again, I do think this can come back down to 60 cents, which is about a 30% downside. But I say high reward because, again, there's a lot of bullish indicators, and this is a retail favorite, can break out to the upside at any moment, and there's a lot of upside potential. So if you want to go long at the current price 95, please do that at your own risk. And personally, I think it would be much better to just set your buy orders at 60 cents where the gap is. Now, if you want to go short now, financial advice, I would not do that, and I would not recommend that. Not saying it's a bad play, but just based on the chart here, there are a lot more bullish indicators than bearish indicators. So it's probably not the best idea. Again, there's the gap up at 60 cents. Good chance it comes back down there. But at the same time, a lot of bullish indicators, and this can go mooning, this can go squeezing at any moment. So I would say going short here would also be a high risk, high reward play. You should be able to make about 30% of the downside here if this does come back down to 60 cents. But if this goes mooning, if it goes squeezing, you can be in a lot of trouble too. So personally, I just stay away from the stock on the short side, but it can pay off pretty big. So if you want to go short here, please do that at your own risk, and I would say cover at 60 cents where the gap is. Alright, so pretty straightforward, guys. Minor news today. The sell-off today wasn't really justified. Fundamentally, the company doesn't look that good, but technically, this looks like a good stock to buy and hold in the long term. Short term looks pretty bullish as well, but it does appear like there is more downside to go. So if you want to go long, 95 cents, definitely not a bad entry, but there is the gap up at 60 cents, which I do think will fill. So personally, I think setting your buy orders to 60 cents is a better play. And if you want to go short, pretty risky, but can pay off pretty big as well. So if you want to go short, please do that at your own risk, and I would say cover at 60 cents where the gap is. So sorry to everyone who lost money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is MULN, Mullen Automotive. Thanks everyone for watching today. I appreciate you guys. Please, like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.